This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices a little bit better this morning. Some of this strength linked to better than expected economic reports today. We did have retail sales coming in a bit stronger. We also had a 9,000 drop in jobless claims. So that supportive. We do feel that the main trend is higher for stock index futures, and there's a very good chance, I think, within the next couple of weeks that we can see some new historical highs in S&P 500 futures. Don't forget the Fed remains very accommodative, even though they have been tapering their quantitative easing program over the last couple of meetings, and most likely at the upcoming meeting on the 18th and the 19th, they will taper again by another $10 billion. But either way, plenty of accommodation still in the system. I think there's enough to continue to take this market higher. Over in the currencies, we're seeing the euro currency advancing to over a 2-year high against the US dollar on very limited news. We also have higher prices for the British pound. Some talk that the Bank of England could raise interest rates sooner rather than later. But it does look like these two currencies, the euro and the pound, are higher on very limited news, in fact almost no news. That in itself is a sign of strength for those two currencies. Also seeing higher prices for the Australian dollar after employment numbers in Australia coming in much stronger than anticipated. Also we have a little pressure in the yen, this on fears that Japan's economy could slow in the second quarter. This when an increase in sales tax in Japan goes into effect on April 1st from 5% to 8%. In the dollar index, looking very bad technically, very weak fundamentally as well. The dollar index should have performed much better as a flight to quality vehicle in light of what's happening in Ukraine, and the dollar very much is underperforming the news. So the dollar index, we believe, is the best sale, and this market will probably continue to work lower longer term. In the interest rate markets, futures a little bit lower, some profit taking coming in. However, we do feel that the main trend is higher, and that the pressure that we are seeing early today linked to the jobless claims and the retail sales numbers, both were a little bit better, will probably not follow through. In fact, there's a very good chance that we can see Treasuries trading from lower on the day to higher on the day. Longer term, still looking for higher prices. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.